Hi Rajesh sir, good morning. Welcome to the show. How are you, sir?
Good morning, Jignesh. I am fine. How about you?
All right, sir. Thank you so much, sir. Sir, what's the outlook for the market?
Overall, if you look at the market behavior since last 3-4 trading sessions, we have seen market was moving higher, and in last trading session, we have marked a high of around 11,700 on the Nifty, and we have witnessed corrective action from that level. But still, we are trading above 11,300, 11,400 level. So looking at the indices point of view, my belief is that we are still in bullish territory, and some consolidation, or we can see, some sector rotation activity is going to happen in the market, and then again, market will again resume its uptrend. But as we have already seen, last 3-4 months, it's a one-way upward momentum we have seen in the market. So this is, a healthy sign for the market, some pause or some rotational activity in terms of sector role. This is, positive sign for the market, and this is what exactly happening in the market. So from Nifty point of view, my belief is that 11,300, 11,250 is likely to act as a good support area for any corrective action in the near term also. And market will try to find support around those levels. On the higher side now, looking at the derivative data as well as the technical setup, 11,550, 11,600 are immediate resistance or supply zone, we can say, in the near term basis. So those who are traders, they can keep their stop losses around 11,300 followed by 11,250. These are the important level where one should keep their stop losses. Those who are buying the position at the current juncture, even in the decline also, if you are buying, you should keep your stop loss at around 11,250 level. And if Nifty moves towards 11,550, 600 zone, where you can book some profits. So volatility is going to remain in the market, because in the last trading session also we have seen, India VIX has jumped up around 20-22%. But still, looking at the current India VIX, it's in comfort zone. There is no as such worry. But yes, because of geopolitical issues there, and market was long awaited correction activity has to be there in the market. So that we have seen. And another distinct new margin is implemented from the today. So these all 3-4 factors which has given some sort of cautious approach to the market, and market has corrected from the higher level, but still the trend is positive. Overall setup is looking bullish, and we will again reiterate that buy on dip should be the strategy, and one should focus on the quality stocks which are available at good support area in this corrective action.
Sir, any view on the bank Nifty side also?
So banking stocks has shown very good run up in last, especially in the last 4-5 trading session, and Bank Nifty also managed to give breakout above its 50% retracement area in the last trading session. But again, Bank Nifty is not able to sustain above that level. So 24,350, 400 is the important key level as of now for the Bank Nifty. If Bank Nifty manages to cross that level, then there is still chances that Bank Nifty can again outperform to the Nifty, because most of the banking stocks has shown very good buying interest in last few trading sessions. And looking at the overall setup of the Bank Nifty, I believe that if Bank Nifty continues to hold about 23,200, 300 zones, then there is a possibility that Bank Nifty will try to attempt to cross 24,350, 400 zone, which is very immediate resistance area for a near-term trend. And if we able to cross that level, then another 500, 600 point up move we can see towards 25,000 on the Bank Nifty. So those who are traders, they should keep their stop losses at around 23,500 followed by 23,200, which are the immediate support area for the Bank Nifty, and one should follow these stop losses. So trend is positive. Maybe some consolidation, then again resumption of uptrend is going to happen in the banking stocks also, because in last few trading sessions we have seen private as well as PSU, both bank has shown good buying action, and most of the stocks managed to give breakout of their consolidation range. And after, despite of correction in the last trading session as well as in the today's session, still they are able to hold above the breakout level. So my belief is that this corrective action is a buying opportunity in the bank nifty as well as in the banking stocks also.
Right, sir. Sir, apart from banking stocks, you see any sectors or stocks that are doing good and one can look at it?
So, looking at the overall setup, most of the stocks have shown some corrective action, and now one should be focus on the stocks which have already corrected in line with the indices and which are available near to their important support area. And as we are expecting some consolidation action, so in consolidation, what we have seen in the earlier behavior also of the market, that whenever there is a consolidation action, so some pharma stocks as well as IT stock and the FMCG, these three sectors always do well in the consolidation activity. So till the consolidation is going to remain in the market, one should focus on the IT stocks, pharma stocks as well as the FMCG stocks. So from IT stocks, I like TCS as well as Infosys. From mid-cap IT, we like Tech Mahindra. And from FMCG pack, I think, Hindustan Unilever is looking very attractive because it's almost has shown, very good corrective action and are now available at the very important support area of 2120 or 2100 level. So my belief is that if Hindustan Unilever continues to hold above 2100 level, then there is a possibility we can see Hindustan Unilever can show good up move from the current level towards 2240, 2250 in the near-term basis. So this is another stock which I feel can show good buying opportunity at the current juncture. From pharma space, we like Divi's Lab as well as Dr. Reddy. These two stocks we like from the pharma space. Even some buying action is there in the metal space also, but this is again, going to remain some volatility is going to remain in the metal space, but looking at the overall setup, metal stocks are also looking very attractive. So we believe that, Jindal Steel and Power as well as Tata Steel, these two stocks are also looking very attractive from the metal pack.
Sir, in the BFSI segment, specifically, you spoke about banking. What's your view about insurance and mutual funds, sir?
So in recent past, we have seen, most of the insurance company has shown, significant corrective action. And across the board, if we look at the HDFC Life, SBI Life, or some other insurance company, they have shown, corrective action in last 3-4 weeks. And most of the stocks now trading near to their, medium-term support level. So as we are expecting that market is going to consolidate further, but risk reward is still favorable in the insurance space because, those who are looking for, short to medium term investment perspective, they can focus on these insurance company to buy in the depth because these are all, quality stocks and which are available after the correction, available at very attractive level for short to medium term perspective. So stock like HDFC Life, which is available at around 570, 580 zone. So my belief is that, if it continues to hold above 550 level, then it's a buying opportunity in the HDFC Life also. Even SBI Life has shown underperformance, but again, looking at the setup, it's trading near to its important support area of 800, 810. So again, risk reward is quite favorable for this stock, and those who are looking for short to medium term position, then they can buy it. But for trader, they should avoid because, I believe that, some more consolidation or some, slow steady momentum is going to happen in the insurance sector. They will not move in a hurry. So those who are looking to buy for short to medium term investment perspective, they can look at HDFC Life as well as the SBI Life also.
Right, sir. Thank you, sir. It's always a pleasure talking to you, sir.
Yeah, thank you.